Hello and welcome to the weekly market metrics. I'm your host Sandeep and we are in week 5 of 2026. Yes, like it or not, January is over and we are left with just about 11 months in 2026. Looks like last week's mayhem in the equity markets has paused a bit and precious metals and commodities continue to make new highs with what looks like a minor pause on Friday. With the union budget scheduled for Sunday 1st of Feb, all eyes are on it at the moment. Anyways, let's check the charts and see how the price action played out this week. We'll also look at what is possible in the coming week. As always, Nifty first. This is a month-end episode, so we'll start with the Nifty monthly seasonality chart. All January months over the last 8 years have closed in red, from 2019 to 2026 that is. That's a remarkable consistency. Historically, Feb hasn't been much better, with 6 out of the past 8 Febs also closing negative. Now February will begin with the budget trading day on 1st Feb Sunday. This could act as a trigger for the market to move directionally. Whether that move is up or down, the market will decide. I'm not predicting. Moving on to Nifty on a weekly time frame, this week's Nifty weekly candle formed an inside bar. The entire candle stayed within the last week's range. For the week, Nifty moved up 272 points or 1.09%. It took support near 24,900 levels, which we discussed in last week's weekly market metrics video. Support and resistance levels remain unchanged from last week. On the upside, resistance is at 25,650 with a minor hurdle near week's high around 25,450. Supports are placed at 24,900 followed by 24,600 and 24,350. Moving on to the daily time frame, Nifty printed 3 green candles and 1 red candle in this 4-day trading week. The index formed a range of 525 points or roughly 2.06%. The index continues to hold comfortably above the 25,000 levels and support and resistance levels remain unchanged from last week. On the upside, resistance is placed at 25,650 while immediate support is at 24,900 followed by 24,600. Moving on to the hourly time frame, Nifty is sitting right at 50 EMA. Price briefly moved above it on Wednesday, then spent the rest of the week chopping around. We are at a phase where there is no clear trend at the moment, though we just got out of a clean downtrend which lasted for roughly 3 weeks from Jan 7 to Jan 27. Talking about Nifty's range till expiry, just ahead of the budget day, Nifty's 2DT Straddle is priced at 376 points or 1.48%. The expiry is on Feb 3, 2 days after the budget. Given the event risk, this implied range looks tight to me. Realized volatility could exceed what the market currently is pricing in. There's also a fair chance that the straddle expands on budget day before IV crush sets in post-announcement. Based on the current straddle pricing, the expected range till expiry on the upside is 25,700 and 24,950 on the downside. Talking about open interest, looking at it just before a major event is of limited value. OI can shift rapidly once the index starts moving. That said, as of Jan 30, Friday close, 25,500 on the call side and 25,000 on the put side hold the highest open interest. Whether these levels actually act as resistances or supports will be clear only after the price reacts. Bottom line, don't rely on open interest alone to define support and resistance levels, especially ahead of event-driven moves. Moving on to SENSEX, let's start with the monthly seasonality chart. Again, over the last 8 years, January has closed negative in 7 out of 8 cases, including this January. February hasn't been much better. 6 of the 8 Februaries have ended in red, highlighting continued weakness early in the year. Very similar to Nifty. On the weekly time frame, similar to Nifty, Sensex printed an almost inside candle with a range of about 1600 points or 1.94%. For the week, Sensex gained 732 points or 0.9%. Immediate support lies at this week's low near 81,000 with a resistance at this week's high around 82,700. Further support levels are seen at 8400 and 79800, while the next key resistance sits near 83500. On the daily time frame, 82,800 and 83,500 act as key resistance levels, while 81,100 remains the immediate support. Talking about Sensex expected range, the next weekly Sensex expiry is on Thursday, 5th Feb 2026, post the budget. With 5 days to expiry, the ATM straddle closed at 1332 points. This implies an expiry range. On the upside, it's about 83,600. On the downside, it's 8950. This broadly places Sensex in the 81,000 to 83,600 range going into the expiry. Moving on to Bank Nifty, on the monthly time frame, it printed a doji candle. For the month, it gained just 29 points or 0.05%. A doji near all-time highs can signal potential exhaustion, but this is not a confirmed downtrend. Confirmation will require a clear follow-up candle. All eyes are now on how February plays out for Bank Nifty. On the weekly time frame, momentum appears to be returning, but last week's resistance at 60,100 remains unbroken as of now. For the week, Bank Nifty gained 1,137 points or 1.95%. Support remains at last week's level of 57,700. On the hourly time frame, Bank Nifty moved above 50 EMA on Tuesday and stayed above it through Friday close. Starting this week, we've included a new indicator that we would track. It's there for you to track as well in the key metric sheet, and the link for it is in the description. It's called market breadth. It's a bit similar to opening the bonnet of a car to see what's happening inside. And as with cars, you don't open the bonnet every day. It makes sense to open it only when you sense something is off. Market breadth is similar. You check it to see what's happening inside around the extremes. We have breadth for two indexes, Nifty 50 and Nifty 500. For each of these two indexes, we track the percentage of constituent stocks above their 21-period daily EMA and the percentage of stocks above their 50-period EMA. A few things which are worth observing on the breadth charts. 1. Broader market is weaker than Nifty 50. If you look at the market low of 23rd Jan, the breadth chart of Nifty 50 stayed above the 25% line, but Nifty 500 went below. As of EOD Friday, 40% of Nifty 50 stocks were above their 21-period EMA, whereas just 28% of stocks from Nifty 500 are above their 21-period EMA. 2. During the October to Jan period, when markets were trying to make new highs, there was a divergence in the breadth which perhaps showed general weakness. Lastly, one cannot use breadth as an indicator by itself, but it's a good metric to keep an eye on. Moving to rate of change. In week 5 of 2026, Nifty and SENSEX gained about 1% for the week. Bank Nifty rose 2% and Mid-Select added 2.5%. Year to date, all indexes are in red except Bank Nifty. Talking about the top performing sectors this week, CPSE topped the chart with 6.51% and was the only repeat inclusion from last week. Energy at 6.16%, PSE at 5.79%, Realty at 3.52%, and Commodities at 3.39% were new entrants this week. What's with these PSE indexes trending pre-budget? We'll know by Sunday. Talking about the range and expiries, this week the range compressed versus last week. The 5-day average daily range is at 255 points, down from 309 points last week. Tuesday recorded the highest daily range across all 4 indices: Nifty, Bank Nifty, Midcap Nifty and Sensex. Let's talk about Nifty's monthly expiry. The ATM straddle opened at 181 points and spiked to 210 points within the first 5 minutes. Intraday Nifty was swinging sharply. Started with plus 252 points, then down 205 points, up 180 points, then down 162 points, then up 250 points. Despite the volatility, the index closed up 126 points or 0.51% over Friday's close. Was it an easy day for sellers? Not quite. OTM sellers who could hold positions longer saw some of the best premiums in months. However, time-based straddle and strangle sellers had a very tough session with elevated premiums and stop losses getting hit on both sides. Moving on to SENSEX monthly expiry. The morning session was tough with the index swinging 678 points and then rallying nearly 1000 points. The afternoon half delivered a strong wall crush. The straddle opened around 500 points, dropped to 200 points by 2:15 pm. And one unusual observation. Until 3 pm, the straddle traded near 100 points, something not seen in Sensex for quite some time. Talking about India VIX for the week, surprisingly, India VIX fell 4% heading into the budget week to close at 13.63. Nifty straddle premiums also declined through most of the week, picking up only on Friday, a day ahead of the budget. Now, what does this indicate? Is the budget shaping up to be a non-event for traders, or will volatility spike on budget day itself? We wait and watch. Talking about commodities this week, what a week it was. Silver hit a high of $121 and then corrected nearly 21%, slipping below $100. Despite this drop, silver and INR gained 3.66% for the week and a massive 47% for the month. Gold surged close to $5,600 before falling to $5,000. Gold futures in India rose 3.39% for the week and 19% for the month. Copper, crude, and natural gas all ended in green. In summary, week 5 of 2026 saw equities stabilize ahead of the union budget, with Nifty and Sensex up 1% while Bank Nifty outperformed with a 2% gain. Nifty and Sensex formed inside weekly candles, highlighting consolidation and indecision before the event. Bank Nifty's short-term bias remains positive, though the key resistance is at 60-100 and that's still intact. Ranges were compressed, but expiry sessions were volatile, making life difficult for time-based option sellers. India VIX fell 4% into the budget week, raising questions whether volatility is being underpriced. Commodities remained strong, with silver and gold posting solid weekly and monthly gains despite sharp intraday swings. Now, moving on to what caught my attention this week. There are 3 articles that I have with me for the week. 2 are finance related and the third is about wildlife, and obviously the more interesting one than the first 2. The first is an overview of our 2026 economic survey published in the Business Standard. It's worth a read, especially the parts about the chief economic advisor's thoughts on trade and currency. Next, I have a Business Today post on India-EU FTA. It details out how it impacts each of the sectors. There is an interesting chart showing 9 sectors where the tariffs have been dropped to 0. You see, beyond the point, bulls and bears can get boring, and hence here's an offbeat read about tigers. So I came across this fascinating article in the New Lines magazine about how tiger became a national animal of India and the general state of tiger conservation in India. Great read if it interests you. As always, all links are in the video description. Now over to what to expect in the coming week. The next week is a 6-day trading week thanks to Sunday being a budget day. There are no events lined up during the week. Talking about the markets, it's the union budget that would drive the sentiment for equities. Commodities are anyways driven by global macro and may continue to surge. And with that, we wrap up this week's weekly market metrics. If you find the series useful, don't forget to subscribe to this channel. Until then, stay curious, stay steady, and enjoy your weekend.